Core CPI versus CPI. Some say core CPI is a better benchmark compared to CPI data to track inflation. Knowing which way CPI inflation is going, it will sharpen our investment decisions. If CPI data is still trending up, majority of stocks will be under pressure. However, there are also other sectors that will benefit from a rising inflation. In this tutorial, we will discuss what are these inflation sectors and how we can invest and trade in them. And core CPI versus CPI, which one we should be spending our time tracking. And before we discuss about this topic, please do take some time to read into the disclaimer. And why most investors prefer to eyeball the core CPI versus CPI? Because it excludes the food and energy prices, which they consider CPI inflation as volatile in nature. And for CPI, which include food and energy prices, which is represented in orange, and we can see that compared to the blue, it is much more volatile. And that leads us to the next question. Why investors do not like volatility? Because they always prefer their investment to grow linearly than being volatile. That has also affected the way they study into the CPI data. Let's face it, volatility is a leading indicator. And when it moves, in fact, it is telling us something about the market. Let me illustrate this with the example in the 70s and 80s during the period of high inflation. So orange represents the CPI, which include the food and energy. And that's in 1972. And we can see that the CPI pick up first and move up first and subsequently followed by the core CPI. Similarly, it peaked first and about 2 months later, the core CPI also peaked and it followed. Now, the high inflation during the 80s, it is also the CPI that has bottomed up first. It makes its very sharp V-shaped recovery and start to trend up. And subsequently, it followed by the core CPI to follow. And again, it peaked, the CPI peak, which include the food and energy prices. It peaked first, and about 3 months later, the core CPI also peaked and it start to come down. Now let's go back to this illustration here. So since the CPI inflation is pointing upwards like this right now, let's take a look at the food and energy prices. How do I monitor all this CPI, the food and energy prices? I have this page and mainly consists of all these commodity prices, except for gold. We could see there's energy and all the food prices that's available in CME. And we can see very clearly since the COVID low, most of them, in fact, all of them at this moment are still trending up. And crude oil does give me an indication that the bull has begun, and this is a bull retracement, and it seems like it's picking up once again. And for the meat prices, the live cattle, it has broke its all-time high and now staying at its all-time high. And during this inflation season, my focus is to invest into inflation sectors like all of these that we're seeing here, and also trade into them. For investors, there are two ways that we can invest in them. Number one, invest directly into those commodities or mining stocks, especially those that pay dividends. And number two, can consider commodities related funds or ETF. Get hold of its prospectus, study them, and do your own selection from there. And personally, I will also enjoy trading into the commodities, and this is usually how I would trade them. 2 points. Number one, know where is the immediate trend. And we're seeing all the immediate trend, it is at the moment pointing upwards. Number two, try our best to trade in that direction. Now let's take a look at what we have studied this year on 10th of April. So with a mix of fundamental news, and this was the first time on the 3rd of April 2023 that we read that OPEC Plus to reduce oil supply and that form a gap. So then my study was that it will start to move up, retrace, and ultimately you'll break this downtrend line and it should be on the way up. And let's look at the crude oil and how do I usually trade them is that since last year, the whole of last year in 2022, it was a retracement. This was a bull retracement, and last year was a retracement bear on the bull market. When I trade in the commodities, my focus is to sell into strength. But moving forward for this year, which I believe that this top will be taken up a matter of time. And for mid to short-term trading, I'm willing to, or rather I'm focusing on buy on dips in the near and further future. And look at how the crude oil has evolved from the crude oil to the E-mini to the micro. And so basically how I trade them, it really depends on my confidence and my resources at the point in time. Usually I like to trade multiple lots. So micro, crude oil, it fits into some time my criteria. It means here is that 1 cent is $1. And if crude oil now is at 90 US dollars, the whole notional value that I'm holding is 9,000 US dollars. So there are so many talks about risk management, and we have today identified its risk in greater clarity. Because we know what is the risk ahead, it is beyond risk. We have to face it anyway. It is also an opportunity in the commodities market that we have discussed today. I always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing will be helpful in how we trade and invest. Feel free to leave me any comments below. I'd love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.